Howdy there, folks. Welcome into today's video. This is a big one here today. I've had a lot of time to reflect on the past year, and I've reflected over the past kind of few days on things that went wrong, things that went right, and where I'm going moving forward. And I have some pretty big announcements in this video here today on kind of my views on all this and those sorts of things. So I hope you guys enjoy this. As always, thank you everybody that subscribe to the channel. Okay, so I want to talk about what these three stocks have in common and what it means, okay? And then I want to go into essentially what's happened over the past year, why that happened, and how I'm going to position in the market moving forward and those sorts of things, okay? Now, before we get into that, I think something very important to understand is kind of how my brain works, okay? And you're probably wondering, why the heck am I showing this image? I'll explain it to you here in just a moment, okay? Because the fact is, we all have brains that work a little differently, right? And we all have little strengths and weaknesses, and there's something I've always been fascinated with is the field of psychology. And I think if I wasn't in the market, I'd be a psychologist. Like, it's just something that's always fascinated me. I've always loved it, and I enjoyed taking several courses in college and whatnot. And something I noticed with myself is, if I'm in a competitive environment, sometimes I have trouble adjusting on the fly. Some people are very good at that. Like, they can adjust immediately and they know where to go. Myself, I'm not the strongest at that. But what I am really good at is, once I figure out something, I'm very good at finding that, let's just call it that little hack, and continue to use that again and again and again and again and again. And so I showed Madden there because I was super obsessed with Madden in high school. And basically how I would play this game is I would go into like practice mode, and then I would put, the computer on the hardest mode, and I would find the exact like the perfect plays to run against any defense. And I knew, like, if this defender moved just slightly this way, I needed to throw the ball slightly out here, and I needed to adjust, and I needed to throw this ball to this player if the defense moved here or did this. And I would have all these different plays like perfected. And then sometimes I'd play my brother, and my brother was my favorite person to play versus the computer or anybody else. And I would beat him most of the time, but every once in a while he'd come up with some new game plan, and I couldn't adjust to it on the fly. So you know what I do? After we get done playing, I go into practice mode, and then I would essentially just like practice whatever plays he was doing against me that were working, and I would perfect those, and then I would be able to beat him a bunch of times, and he would figure out something new. So I'm not the best at adjusting on the fly, but once I'm able to pinpoint and figure out something, I'm able to use that again and again and again for success, until something new has to happen that screws me all up. Let's just call it that, okay? And so that's kind of me at the end of the day. Now, those three stocks, what do these three stocks have in common, okay? Tesla, an electric vehicle company; Revolve, a clothing company, e-commerce company, if we want to call them that; and Elf, a beauty company, cosmetics company. What do those three companies have in common? Well, it doesn't seem like much, right? They're three totally different companies and three totally different businesses, right? Well, let me explain to you exactly what they have in common. First is, they were all money-losing companies. They all had negative net income. They were losing money, okay? Then I buy the stocks, and then very shortly after, those companies all flipped to profits, and I made life-changing money on those stocks, right? So nonetheless, I think I found a little hack on the market, right? Oh, I need to find companies that are on the verge of switching from basically money-losing companies to money-making companies. And if you do that, you're going to get likely some insane gains. You just got to be kind of like 6 to 12 months in front of it. As long as you're 6 to 12 months in front of it, you can build out a nice size position and then make a stupid amount of money, like more money than you ever dreamed of, right? And so I found this hack, and it worked. It worked several times, okay? And it worked until it didn't. And now I've got to make adjustments, because if we look at my newest group of stocks, let's say that I bought very, very heavily here recently, right? And we look at those companies. The thing is with those, since I've bought them, they've gotten further from flipping to profitability than getting close, okay? So honest, are they at profitability? No. Now, I will say they're the closest thing to the next Elf or the Revolve or any of those other stocks. They're the closest of the bunch of new stocks I have, right, that I've been buying the past year. But still, they're not there. They're still quite a ways away, right? Fubo, heck no, they're not even remotely close. Not even remotely close to profitability as of right now, right? The Chef, no, they've moved so far away that now it's like a 50-50 if the company can make it over the next year. Like that's how far they've moved. Their profitability got way worse, not way better. Everything in that business model got way worse, right? And Oatly is basically a splitting image of the Chef in terms of like massive revenue growth company they were. And now people are like, hey, you guys better start making some money because it's a tougher money raising environment, right? So these companies got, if anything, further away from profitability, and Honest is still in a position where it's tough sledding, right? Now, this definitely messes with me, right? Because I'm used to buying these stocks and then them getting much, much closer to profitability and then doing that big flip, right? And then making just ridiculous amounts of money on that. But what happened in reality is everything went against what I thought was going to happen, right? And why is this, right? Well, the truth is I've never had to deal with inflation since I've been in the market. Since I got in the market end of 08 into 2009, inflation's never been a thing. Until this past year, I never had to deal with that crap. It was never like a concern. Like inflation for me, almost my entire investing career was under 4%. And most of the years it was 1-2%. So this whole inflation thing, right? It was never, ever a problem. But here's the thing you got to understand, okay? And here's the thing that I now understand is inflation can completely wreck companies and it can completely wreck consumers. I didn't understand to the extent of how bad this could really get, essentially. I understood it was like a thing, we'd have to work through it, but I didn't understand the extent. And when I look at the damage, the collateral damage that has happened here, it's borderline shocking. And I see why the Fed has to take this so serious, right? And of course they lagged too far on the other side, and they should have been raising rates way before they were. But like now it is all starting to make sense, right? And so it's not just like, oh, this inflation number went up, but no, it's like actual things have happened here. This deteriorated massively, right? For instance, personal savings rates. Obviously, if you just understand like economics 101, like if there's a higher rate of inflation, it's going to be likely less money for people to spend out there. But I didn't realize it was going to get this bad, this fast. This is as of September. I'd almost guarantee you that number is much lower today, which is shocking because that might be as of right now, we might be, or by the end of this year, we might be at the lowest number ever. We'll see, okay? But nonetheless, a personal savings rate in the United States of America has dropped off a cliff. And now we are at numbers we were, guess what? Right prior to the great financial crisis. Oh, wow. Okay. That's how much damage this inflation has caused in that quick of an amount of time. Like, I'm very, very scared to see the numbers whenever the December numbers come out in January, February. It'll be probably February because they always lag like 2 months. I'm going to be scared to see those numbers because we're going into the holiday season, the holiday shopping season at 3.1%. What are we going to exit this year at? Oh my gosh. Okay. Oh my gosh. Things like this have never had to be worried about container freight rates, okay? Container freight rates over 5x'd in 1 year. Okay, everybody watching this right now, if you're not that experienced in the economy or the markets, you might not grip your head around how ridiculous that is. I can't even explain how ridiculous that is. I can't put it into words. If freight rates went, if ocean container rates went double in a year, that would be mind-blowing. That just doesn't happen, okay? A 5x in 1 year? And the thing is, this wrecks companies' profitability. It completely ruins them. Because you're not, as a company, you're always prepared hey, maybe freight rate can go up 20% or 30% or something like that. You're not prepared for freight rate to go up 500%. To ship something overseas. You're not prepared for that. That's not something you model in as a CFO. That's not something you model in as an executive because that doesn't happen. You don't just, oh man, I'm afraid about freight rates might go up 500% next year. No, you never have to worry about that. And us as investors, we never have to worry about this until we did, right? And the fact is that's how insane things have gotten. And that destroys your profitability as a company. That wrecks your margins as a company. That wrecks your margins. You have no chance. No chance in an environment like that. Come on, man. That's just insane, right? If you look at something like oat futures, right? Oats are a joke. Like oats are going to be usually very, very stable, like most commodities, but especially something like oats. And you look at a company like Oatly, they got wrecked. They're absolutely wrecked. I mean, the price of oats like 2x to 3x in a matter of 12 months. Once again, that's not something you ever have to worry about as an investor. Like, oh, the raw materials that go into my company are going to go up 100%, 200%, 300% in a matter of months. That's not something you ever have to concern yourself with, ever. So the worst case scenario has played out for countless companies. That's absolutely extraordinary, right? If you look at something like this is, basically like trucking rates, right? Trucking rates are usually relatively stable. Sometimes they're going to drop a little bit and it's going to get better for you if you're somebody that has to transport product around the United States of America, let's say, for instance, right? Sometimes it's going to go up, right? Sometimes down, sometimes a little up. It's relatively stable. I mean, this goes back all the way to 2004, right? Relatively stable. Even a jump here from 2018 to kind of 2019, that was kind of a big move there, but still relatively stable. But what's happened, obviously in starting in 2021 and as we moved into 2022, it's ridiculous. Like just to transport something around the United States got to these ridiculous levels. Not to mention, on top of that, diesel price being so dang expensive. So that's just something extraordinary, okay? Now, I want to talk about, where I move forward, what I'm going to buy moving forward and those sorts of things, okay? And what I'm going to do with my current stocks, all that in just a moment. But nonetheless, I think it's very important that everybody that's gone through this market understands you have gone through a market that is unparalleled, a market that we haven't seen this type of stuff in, you would have to go back to the 1970s to have gone through a situation like this before, right? And the scary part of inflation, this has to be said, okay? The scary part of inflation is not just all the numbers I showed you right there, where it wrecked companies' margins, profitability, things went to levels you couldn't even imagine, right? But the other scary thing with inflation is you never know if it could come back a year from now, 2 years from now. So right now, the Fed is full go on getting inflation down. And everything I possibly look at, right, including a bunch of things I just showed you there, show that inflation's coming down. It's coming down massively. And you'll see that in the numbers in 2023. But the thing is, with inflation, you never know if it can come back in 2024 or 2025 and get to some insane levels, right? So that's something we're going to have to continue to keep our eye on for likely years. Now, also, something I didn't mention there that I think is also very important is when folks do their DCF models and whatnot, sometimes basically what they'll do is they'll take whatever the interest rate is and divide that out by whatever number. So basically, if you're talking about a situation where a company used to be valued at $100 billion. Well, if suddenly interest rates are let's call them much higher, the Fed funds rate, then the way people are going to value those is going to be very differently. So now that company that some folks thought was worth $100 billion, now they're valuing it at $25 billion or $30 billion or $35 billion. So that happens as well, which matters in a significant way to valuations. That's something I didn't even bring up there, okay? And I think that's very important as well, okay? Now, let's talk about kind of where I move forward now at this point in time, right? Because I'm always a buy the dipper. Don't matter what the market is, I'm always a buy the dipper, regardless of how scary things are, regardless of it's inflation, deflation, it doesn't matter. I'm always a buy the dipper out there. So the question is, where do I buy the dip over the next year, okay? The first thing I'll say before I get into where I'm buying the dip next year, it won't be in the same companies I've been buying, which I've been buying a lot of different stocks. But in terms of those unprofitable ones, no, I'm not throwing new money after those stocks. So stocks like the Chef, stocks like Oatly, stocks like Fubo, stocks like Honest. I'm going to hold those stocks, but I'm not going to put fresh money into those stocks at this point in time. Those for me are just holds. And, in terms of Fubo, they still got a good amount of cash around. And I think they just have such an exciting story that they should be able to raise fine. In terms of Oatly, I kind of put them into the same category as a Chef that I have my concerns, right? In terms of Honest, I actually don't really have any concerns. But at the same time, I've already invested so much money into Honest. I can't put fresh money there. I can't put new money going into 2023 in that stock anymore. I'm just going to hold it. I believe that one of those stocks has the best chance to become the next type of elf stock, but I'm just going to hold it. I put so much into those. That's okay. You know, like I've already overinvested into all those companies. And something I always knew was if you're going to bet on an unprofitable company, bet small. So then if you make a mistake, it's a small mistake. And if you're right about that, you're still going to make a ton of money, right? Because you got to, like I spoke about at the beginning of this video, if you get in one of those type of companies that's a money loser and then flips to profitability, usually there's a massive move up for the stock price, right? So it's kind of like a smaller bet. So if you're wrong, it's a smaller mistake, but you're still going to make a ton of money in the end. I got a little like, what do they call it? Winnie the Pooh, you know, went in the honey pot too many times, right? And I went way too heavy in all those unprofitable companies. And I think we all know that now looking back, right? So nonetheless, where do I go kind of moving forward with kind of buy the dip and where am I focused here, okay? So first thing is positive net income companies in terms of buying the dip. That's what I'm fully focused on moving forward, companies that have positive net income, companies that have positive cash flow and are expected to have cash flow generation that's going to get even better, and companies that I expect to have expansion in margins and expansion in net income in 2023. That's where I'm going to put fresh money in 2023, because the bottom line is we don't know where the economy's going, right? There's a lot of worrisome signs. I showed you the personal savings rate in this country, right? It's dropped off a cliff to the lowest numbers we've seen since the great financial crisis, and maybe we're going lower, okay? Obviously, we've had this insane construction boom that's going on right now that's likely going to start wrapping up in 2023. What does that mean for the jobs market? So the way I kind of look at this is I've already got a ton of those unprofitable companies. I'm just going to hold those. As far as fresh money, I've got to put into companies that actually make money and are going to get through the storm, out to the other side, and also feel comfortable with my investments, because I do not like the feeling of being in stocks where in buying into stocks where I feel like, oh man, could they make it? Because I own a few of those stocks. I have a few of those in my portfolio that I'm like, are they going to make it? Like that's real question marks. And that's stressful. That's too much stress. At the end of the day, that's way too stressful to have to it's one thing to worry about, oh, my stock might drop in the short term. But to have to worry about, like, is this company going to make it to the other side? That's a whole different scenario there, okay? And the thing I'll say about the market is, when it comes to, these companies that I'm speaking about here, positive net income companies, positive cash flow companies, expected expansions in margins and net income in 2023, the fact is now at this point in time, as I'm recording this video right now, and it's probably going to be even more true, 3 months from now, 6 months from now, is these stocks that I just spoke about right there, these stocks, many of them are trading at multi-year lows. The fact is, multi-year lows for these stocks are everywhere. I'm talking some of the best companies in the world are trading at levels they were trading at back in 2018, 2017, 2016, 2015. And so the way I look at it is I'm like, one, I feel comfortable investing in those companies, and whatever happens in the economy, those companies are going to be just fine. And the second component I'm looking at when it comes to these sorts of stocks is I'm getting them for the cheapest values they've been at in the longest time. And that's a very rare opportunity to be able to buy the highest quality companies in the world at multi-year lows. Doesn't just happen all the time. It's very few and far between, and when you get that opportunity, you've got to take advantage of that opportunity. And we've got one of those rare opportunities. So I'm going to get probably 6 to 12 months here of just continue to load up on the highest quality companies, the biggest net income type companies, great profit machine companies that have incredible workforces and incredible product roadmaps. I'm going to get that opportunity for the next 6 to 12 months and build out my portfolios with some of the highest quality of the highest quality. So that's the way I'm personally looking at that, guys. So yeah, hope you enjoyed today's video. Hope you got some good value out of it, reflecting on the past year, changes, things I'm moving forward over this next year, and kind of forward where we're kind of going in this whole situation. So I appreciate you guys spending the time with me today, as always. Also, if you didn't know, our once a year sales coming up for the private stock group to get access to the private Discord chat, all my different course curriculums, teaching everything I possibly know and things like that. So if you want to get that deal shot to your inbox as soon as it drops for a once a year sale to your inbox, go ahead and check out pinned comment down there, enter in your email, and we'll send it over once the deal drops on Black Friday. Much love and have a great day.